Welcome to the Explainer. Today, we're jumping right into the absolute market whiplash that happened on November 20th, 2025. This was a day that started with a huge bang and just ended in a bust. It left everyone asking one massive question. Is this whole AI boom for real? It was really a tale of two completely different markets packed into one day. The S&P 500, it started out soaring on what looked like amazing tech earnings. But then, bam. By the closing bell, it had plunged 3.5% from its high, an absolutely brutal reversal. We haven't seen an intraday swing that wild since back in April. So, the big question is, what on earth happened, right? How does a day that starts with so much promise just fall apart so spectacularly? Okay, let's get into it. We're going to unpack exactly what was behind one of the most volatile trading days we've seen all year. So in the opening hours, the market was absolutely on fire. Totally supercharged. You had these two massive catalysts, incredible earnings from a tech giant and some really good economic data that had everyone thinking, okay, this rally has legs. First up, you had NVIDIA. And let me tell you, they dropped what looked like a perfect, flawless earnings report. They didn't just beat expectations. They completely smashed them. And their guidance for the future, so strong. It really looked like it was confirming that this AI supercycle was the real deal. And just like that, the stock rocketed up over 5%. And if that wasn't enough, we had more fuel for the fire, a strong jobs report. The economy added 119,000 new jobs in September. So all those fears about a recession, they kind of started to fade into the background, giving the market yet another reason to just keep climbing. But then, right around midday, the whole story just flipped on its head. All that optimism from the morning, it just completely unraveled. So let's take a look at how this story of incredible growth suddenly turned into a story of fear. And you know where it started? Right back with NVIDIA, the hero of the morning. Despite those amazing headlines, a different story started to bubble up. People started whispering about AI's crazy high valuations, and they got worried about NVIDIA's inventory levels starting to creep up. That's all it took to spook the market. The stock did a complete 180, totally reversing course and ending the day down almost 3%. Okay, so NVIDIA's reversal was the spark, but what turned it into a wildfire were these other concerns lurking in the background. If you looked closer at that same jobs report, you'd see unemployment actually ticked up a bit. Then the Fed released its latest meeting minutes, and the tone was, well, hawkish. They're still really worried about inflation. That sent a chill right through the market, and any hopes for a rate cut in December just vanished. Poof. And just like that, the fear went viral. It wasn't just about NVIDIA anymore. This thing spread like crazy, hitting the big market indices hard and kicking off this classic scramble away from anything that looked risky. And you can see the damage right here. It was everywhere. The NASDAQ, which is packed with tech stocks, had been flying high, up over 2%. It ended the day down 2.2%. That is a massive swing. The S&P 500 and the Dow got hit hard too, both closing deep in the red after their strong starts. This chart shows you exactly how that fear played out. Investors were just fleeing from risk. They dumped the high-flying tech stocks, the IT sector dropped 3%, and where did they run? They ran for cover in defensive stocks, like consumer staples, things people buy no matter what. It was pretty much the only bright spot all day. So this number you see here, 26.51, that's the VIX, which is basically the market's fear gauge. And to give you some context, anytime it gets over 20, traders start to get nervous. So at 26.51, yeah, that's a huge spike, the highest it's been since April. It's the market basically screaming that fear is now firmly in the driver's seat. And this risk-off feeling, this rush for the exits, it wasn't just happening in the stock market. Nope. It spilled over into other risky assets too. Just look at Bitcoin. It dropped 4.6%. It seems like investors were just dumping anything and everything they thought was a bit too volatile. So this brings us to the crucial question. What do you do in a market this crazy? The chaos of the day really lays out two very different paths. Two different strategies investors are now thinking about as they try to figure out what's next. So here it is, the big crossroads for investors. Path number one, you go on the attack. You buy the dip in tech because you believe this whole AI growth story is for real and unstoppable. Or path number 2, you play defense. You pivot to safety, looking for stable, value-oriented companies that can hopefully protect your portfolio if things get even crazier. I think these 3 stocks just perfectly capture the entire story of the day. You've got NVIDIA's big reversal. That's the AI dream running head first into a wall of fear. Then you have Walmart surging, which tells you consumers are looking for value and safety, and SanDisk. Wow, a 20% plunge. That just screams extreme volatility in the tech space right now. So when you step back and look at the whole picture, this wild, chaotic day wasn't just random noise. Not at all. It actually exposed this really deep conflict right at the heart of the market, something that's pulling it in 2 opposite directions. And what's that conflict? Well, it all boils down to this one fundamental question. Is this AI boom a real, sustainable revolution, or is it just an overvalued bubble waiting to pop? The violent swings we saw, that's the market desperately trying to figure out the answer. So, if there's one key takeaway from all this, it's that we have 2 powerful, competing stories fighting for control. On one side, you have the bulls. They're saying, look, NVIDIA's numbers prove AI demand is real, the consumer is still spending, and the economy is okay. But on the other side, you have the bears saying, no way, this rally is just hype, the Fed is still a threat, and the whole market is super fragile. And November 20th, that was the day these 2 stories had a massive, violent, head-on collision. Which, of course, leaves us with the big, multi-trillion-dollar question moving forward. Was this just a one-day panic, a healthy shakeout, or was this the opening shot in a much bigger, more painful reckoning for AI stocks and, well, the entire market? That is the question every single investor has to be asking themselves right now. Thanks for tuning in.